How can a trader identify tops and bottoms? Well, let's ask Tony Turner. Well, Tony, what are the characteristics of a top and a bottom, and how do you identify them?
Karen, when a market is coming up, say a market is traded, maybe we'll call it the S&P 500. It's traded up for maybe traded in an uptrend, higher highs and higher lows, maybe for 6 months, maybe for 2 years. The longer it's moved higher, of course, the more we have to watch it. That's the move up, the markup period in an uptrend. Nothing moves up forever, and at some point people are going to take profits and it's going to start to come down. So we watch many things. Something that I think a lot of traders don't think about is when we're watching a big market like the S&P on a chart, it's very wise sometimes to back up, look at a weekly chart and a monthly chart, establish what we call price support and resistance zones on that. And then we see on a weekly or monthly chart, can the S&P 500 continue to make higher highs and higher lows? At the point where it can't, and it starts to roll over, of course we have to look around us at global events and conditions. Has it gone up for a long, long time? Global events and conditions, are they going to give it enough belly punches to roll it over and make buyers put their hands behind their backs and say, I'm not willing to pay any more for this market right now? So we watch for perhaps a top to come in where if it goes straight down, and then we watch for the next top to come in, can it go higher than the high before? And if it can't go higher than the high before, especially on a longer term chart like a weekly or a monthly chart, then we have to say buyers are no longer willing to buy at a higher and higher price. And perhaps this is a time when we should take profits or at least tighten our stops.
Tony, does it take a long time for a top to form?
It can take a very long time, and it can take a matter of not long at all.
Which is why we need to keep watching.
I mean, if you look back at the year 2000, when we had our NASDAQ, the internet highs, that bubble was formed by a very steep uptrend to the upside, so the top of that was very, very short-lived. If our ascent is more gradual, sometimes a top will take longer to form, but we can identify it because the candles or bars in between will get wider and wider as the bulls say, no, no, this market needs to go higher. The bears say, no, no, we're going to push it lower. And these big, long bars just contribute tremendous confusion. At this point, it's very smart of us to raise our stops or take some profits. And if it is a top, tops can be very volatile and take a little while to form, and then we see a break of support where we can draw a line as a place where we definitely should take our profits and either sell short or wait on the sideline.
Well, Tony, is the same true for bottoms?
Bottoms can be different. They can be quicker, Karen. Not always, but many times, and especially if we look back. Now, the bottom of 2001 and 2 took longer to form, and it formed, I can see a weekly chart in my head or a monthly chart. It was a double bottom. The bottom came down, and that's actually the best one. Made a low, came back up, looked like a W, came back down, retested, and started up, and a very nice uptrend higher. And it wasn't the hoorah uptrend that we had since the lows of 2009. Now, if you go to the lows of 2009, it was, of course, it was again a very steep drop down. When things are steep, they tend to, then the reaction is, the move is steep, either up or down. If the move is steep, then the reaction tends to be equally, you can't say, equally
sharp.
Equally sharp. Thank you. So in 2009, in March, the market came down, but that Lehman Brothers drop was horrific, scared the devil out of all of us, and then started up. And I thought it would come back down and retest those lows, but it never did.
That's right.
It never did. It actually fooled around there in April and then said, no, I'm going up, and from now, you know, this is it, at least for the time being, and that's all we had to go on. So that was a very steep drop, very fast bottom. Maybe we could legally say it took a day or so. And
then this rapid ascent.
And then up it went. So bottom, and they're all different. And if they weren't all different, trading would be easy. But because each and every top and each and every bottom, the characteristics are so very different, that's why trading can be quite a challenge at times.
Toni, thank you.
You're welcome.
Toni Turner's been my guest. You're watching the MoneyShow.com video network.